You spent a lot of time in China. You were here originally in 1984, Ray. What are you seeing in terms of the opportunities now, given the changes that have been underway in the capital markets and the economy here in China?
Well, there's terrific opening up of the capital markets and a lot more liquidity. Generally speaking, these are second largest markets in the world, and they're opening up for investment. And so I'm very excited about that. It's particularly exciting to me because, as you mentioned, I started coming in 1984, and I can tell you that I've watched and been part of that evolution. In 1989, I remember an organization that was put together by 7 companies to develop a stock market, the first stock market in China, and it was in a dingy hotel room, and these 7 people put together the first development of the stock market. And I've watched the development of their skills, their organizations, the financial institutions, and it's been a pleasure because that's developed in much the same way as the whole economy's developed. So there's a modernization, there's an energy here. That's terrific. So I'm excited to be part of it.
Those who flag the concerns around and suggest and point to the fact that in terms of reforms, there have been some step backs, whether that's yuan liberalization or capital controls that have been imposed or the greater role of the SOEs here. How do you square that with other advances that are taking place in China? How do you read that?
I think that, first of all, I think people put too much emphasis on the short-term problems. Ever since I was here, there was always reasons not to believe the success. Okay, so now look at the force behind that success. When I was here, I remember being a guest in 1984 of CITIC, and it's a 16-story office building, and I would look outside, and there were hutongs. Hutongs were just the little neighborhoods. And I said, with the opening up, there was going to be the capital markets coming in, and there's going to be buildings and everything. And so if you look at the path over there, there's just too much emphasis on that. And I think what you're probably referring to is maybe the leveraging process. Maybe that's the issue. But when I look at the state-owned enterprises, it used to be 5 or 6 banks would lend money all to state-owned enterprises. And there was no small and medium-sized enterprise capital markets. Since then, about 1/3 of the lending is coming from a new capital markets, and so there's access to capital for small businesses to grow and so on, and new savings visit. If I look at the links, the Hong Kong Direct, and I look at the free economic zones and all of that development, the development of CDS markets or bond markets and all of that development, there's been wonderful development. So I think it's important not to view it in this westernized perspective of some of these things. It's been, anyway, very, very effective. And if we're talking about something like the issue of the deleveraging, I mean, I've watched many countries go through the deleveragings and manage that.
But really on the size and scale that China faces.
Oh well, no. First of all, if you look at debt problems of countries, the most important issue is whether they have a debt denominated in their own currency or whether they have a debt denominated in a foreign currency. Then you look at how sizable the debt is. So the debt ratios here are not as bad as the debt ratios. Their debt ratios are less than our debt ratios, and also it's denominated in their local currency. So now you have to go to the segments of the debt. There is a local government debt issue, and then there are certain parts of the system in which there's issues to be dealt with. There's a forthrightness in looking at that. I have conversations, and I could say that the understanding of those issues and the being very forthright and bringing up the deleveragings, I would say, isn't this admirable by comparison to what we experienced in the 2008 financial crisis? In other words, you didn't get a heads up from the government that said, now we're going to manage deleveraging. You had 10 years ago, you had a financial crisis in which they went into to it, and then they're in a reactive mode. This is a proactive mode of something that becomes manageable. So, and if you take any debt crisis, even the worst kind of debt crisis, it comes and goes. 2008 financial crisis in us was dealt with monetary and certain fiscal policies and changes and so on. And then there's 2009, and since 2009, we had a big bull market as a result of that. These things, the financial crises they come and go. They're short-term things. You have to look at the innovation. You have to look at the capabilities. They're unleashing an economy that has innovation. There's entrepreneurship that is existing here that never did exist here. The vitality is a terrific place. So look beyond these things, or ask yourself whether they can be well managed, and also look at the capabilities of the people. Somebody like Liu He is a very capable person. So I think that those are the things that matter most in terms of picking a good place.
Broadly, there are opportunities for the fund management industry in China, given the changes and the reforms.
I think the Chinese government will determine how welcome outside investors are, and as they open up, we'll be there, and others will be there. My sense is that there'll be a broad opening up because they also want to bring in the skill sets. One of the great developments in China is to bring in the best world-class standards. If you want to build an automobile industry, you bring in General Motors and you bring in the best automobile companies to help to bring about world-class standards. Because financial reform is such an important thing, it'll be part of a process to bring in the best in the world, to try to bring in the best practices.